Hi everyone. If you're watching this video, you're a friend or family member, and I thought it'd be fun to make this. It's a little PowerPoint, and then we'll go over the Weeble app later in the video. But this is Stocks 101, the intro to Stocks and Weeble. So yeah, it's easier to do this than explaining it all separately. So let's go ahead and start. We're gonna start off with some just stuff you should know. So general stock info. Obviously, stocks are kind of crazy. So we're gonna look at this one here on the right. I put a picture of iBio. It's a screenshot from the Weeble app. So let's look at some elements of it. So highlighted here is what's called the ticker symbol, which is basically an abbreviation. It's usually 4 letters or less, 4 or less, and it's just an abbreviation for the company. So obviously in this case, we're kind of lucky that iBio is 4 letters, so iBio is the ticker symbol. They don't always match up though. So next, Amex is highlighted, and what that is the market that it's trading on, also known as the stock exchange that it's on. This is kind of irrelevant for us. The only thing that's different between stock exchanges is the hours of operation and kind of what they focus on trading. But that's just the stock exchange. You don't have to worry about it really. And then we have the arrow pointing at where the name of the company will be. So obviously, in this case, the name of the company matches the ticker symbol, but that's not always going to happen. But that's where the name of the company will be. And then finally, one of the most important parts is the price. This is the price per share. It'll be in this boxed region. The bigger price is the price during the day, and then we have the after hours price below that. I will go over what the hours of operation, what after hours is, and day later in this video. So what do we know? Market is the stock what it's traded on. So we have Amex for iBio. Amex and NYSE are both New York Stock Exchange markets. NASDAQ is another one. NSE is another one. NASDAQ's mostly for tech. You'll see a lot of tech companies in that. But really, they don't have that much, relevance for us. So, and the ticker symbol, which is what this thing next to the market is, it's just what's used to identify it. It's abbreviation. So, for example, AMZN, Amazon, is short for Amazon.com. That's it. Pretty simple. So let's move on. So there's a few main things that you should know. Long is when you buy shares. So I like to think of holding long term. You're long on a stock. So obviously you're going to buy shares when you think the price of the stock is going to go up. You want the value of the shares that you own to increase over time. So you're long. The opposite of that is short. So it's when you sell shares that you don't own. And we'll go into this a little bit later when we open the Weeble app. But you're not going to really have to worry about this because we're going to be doing a cash account. But basically, so it's like short change at a register. It's money that you don't have. In this case, it's shares that you don't have. So people will short a stock. They'll sell shares that they don't have, and then they'll buy back the shares at a lower price. You short when you believe the price is going to go down. So, and you'll sell shares when you think the price is going to go down. So obviously, if we're holding shares and the price goes up and we're making a profit and we think it's going to go down, we're going to sell, to make sure our profit is realized. Bullish is another word for being long, or a bull. So it's someone who's long, someone who thinks the price is going to go up. I'm bullish on iBio. I think the price is going to go up over time. The opposite of that is bearish. You'll see all of these words used in the comments, or on websites, on articles. Everybody uses these. These are very important words to know. But yeah, bearish is when you think the price is going to decrease. So if you say I'm bearish on this, or he's a bear, blah blah, blah, just crap like that. Moving on. So how does it work? Share is a portion of the company. The price reflects how the company's doing. So that's kind of a given. So we'll talk about the hours of operation here. There's a pre-market, which is 1 to 5:30 a.m. This is AM. So, you know, obviously we should be asleep at this time, but maybe you're not. There's the day hours, which is the normal market time, which is day, which was we were talking about earlier. And that is 5:30 a.m. to 1 p.m. So that's the normal day. Obviously, the market is based off of New York. So these are more normal times over there. It would be 8:30 to 4. But here in California, we're doing Pacific. We're 3 hours early, so everything's earlier for us. And then there's after hours, which is 1 p.m. to 4 p.m. And the price can change in any of these hours of operation. And we on Webull can buy and sell the stock in any of these hours of operation. We can buy and sell the stock at any time all day. And it's cool because Robinhood, for example, which is advertised a lot on television and even on YouTube and stuff, you can't sell or buy in the pre-market, which is kind of crazy because, you know, you might want to. It might be at its peak price of the day in the pre-market and you might want to sell. So it's good to have that extra option just by using a different app. So yeah, that's pretty cool. There's different types of trades that you could do. So day trade, there's day traders. You'll see this on YouTube. These are people that are looking to buy and sell a company pretty much as fast as possible. Quick profit. So you buy into a liquid company, which means when a company is liquid, that means it's easy to sell their shares fast, basically. You can liquidize, you know, your assets quickly. Turn your shares into money, cash. And you look to sell within a day or two. I was going to put a day or two. I put a day or 1 day. Or no, within the day or a day. So basically a day trade is like it says, you're going to buy and sell within the day or another, like you'll buy one day and sell tomorrow. These are very short term, quick profit, you know, kind of things. Swing trade is when you buy into a company and you're looking to sell in a couple of days, couple weeks, even a couple of months. And usually you're going to swing trade when you know that a company has some kind of press release coming up, some kind of news, in like biotech companies. Maybe they have an FDA approval for a drug coming up, or something like that for pharmaceutical companies. So it's going to be pretty much contingent on news or, you know, some particular event that's going to happen. That's swing trade, which is probably what you'll mostly focus on. Swing trades and long-term investments. And long-term investments are obviously long-term. You buy in, you're going to hold for months, maybe years, and you're going to let that just accumulate over time because the price of the company is going to just increase steadily because it's a good company. And the main thing that we want is to invest in a company that you think is interesting and that you think is valuable. Don't just buy a company based on hype. I've done it and lost money. Buy a company that you know what they're doing, you like what they're doing, and you think there is value to it. And you'll probably make out. You'll probably make some money. So another 2 words that you should know is bid and ask. You'll see these a ton in the comments. And the main thing that people say is slap that ask, which is kind of funny. But basically, the bid is like an auction. It's how much you're willing to pay for a share. Just like an auction, how much you're willing to pay for an item. You bid a certain amount. So the bid is the next price someone is willing to buy the stock for. So, for example, if there's no bids on a stock, and we put in an order that says, hey, we'll buy this many shares at $1 per share, the bid's now at $1 times however many shares we put. But the bid will be $1 because that's how much we're willing to pay the next person. Opposite of that is ask, which is the next price someone is willing to sell for. Just like, you know, at an auction, they have an asking price. Hey, you need to buy it for this amount of money. The ask is generally more important also. Well, both are important. They kind of work in conjunction. But as the ask increases, so when people are selling this stock for a higher price, obviously the stock price increases. So people will say slap that ask when they want you to buy these shares at the asking price so the stock price goes up. And it's kind of a lot. But just know those words, and you'll kind of get familiar with them as we look into the Webull app later on. So who is Dow Jones and why, and what the hell? So there's these things called indices. So an index is a grouping of stocks. So if you want to measure how well the market is doing on a particular day, you look at these. You look at the Dow Jones, you look at the S&P 500, because all it is a grouping of a certain amount of stocks. And if the Dow Jones is bad, if the S&P 500 is negative on the day, if it's having a red day, people will say the market's down. Market's down. Market's having a bad day. That means in conjunction, these companies together are negative. They're not all negative. It doesn't obviously apply, but overall, the market as a whole is negative. So they're kind of just a basis of how well the market's doing that day. You can't buy shares of an index, so you can't go and buy Dow Jones for 26,000 or whatever it is, but you can buy ETFs, which is like a stock version of an index. So for example, another index is NASDAQ. They have an ETF called Triple Q. It's like SQQQ, and you can buy shares of it, and it's cheaper. It's not $3,000 like the NASDAQ says, but it's basically you're buying a portion of that group of companies. And if the NASDAQ, if all the companies overall do well, then so is that ETF, so is that stock version of that index. It's kind of confusing, but just remember, Dow Jones, S&P 500, NASDAQ, you can't buy shares of those, but you can buy shares of ETFs. And there's also other ETFs that can cover specific areas. Like, for example, there's ETFs for oil companies or ETFs for gas companies. There's a lot of different ones out there. So before we go to the Webull app, I wanted to do a little example. We'll look at something. So let's look at Tesla Inc. So obviously we're all familiar with Tesla. Pretty crazy. So this is something that you'll see. This is, if you look it up, this is Yahoo Finance. It'll look pretty similar on the Webull app. So let's just look at a couple things. What's the ticker symbol? So obviously if we look over here, what's the abbreviated version? We have TSLA, Tesla, right? So there it is right there. What stock exchange is it traded on? So is it New York Stock Exchange? And we can see next to the ticker symbol. So the stock exchange is usually going to be paired with the ticker symbol, either on the left side or the right side of it. So we can see that it's NASDAQ. And then how much would a share of Tesla cost to buy? At the time of this picture, since it is after hours, the price would be $15.76 per share, which you can see the after hours price right here. But it closed at $15.68.36, which is the price right here. So if we bought right at closing during the day, that would have been the price. But since it's after hours, we're looking at this smaller number, and it's gone $7 up after hours. But yeah, so let's take a look at the app, and we'll continue this video from there. So we're opening up the Webull app. This is what it looks like when you open up. Watch list is the first thing, all the way to the left. So you have an automatic watch list for your positions, and then you can create other watch lists. And a watch list is basically like a playlist of stocks. So here's my other watch list of July stocks. Markets is, as it implies, markets. You can look at cryptos. You can look at how many companies advanced, how many declined, which is just, gain price, lose price. And you can look at global markets and stuff like that, and just see how the market overall is doing. And then you have community, which is just people who have Webull and their comments and posts. And then you have menu, where you can see your account information, your profile, and stuff like that. So now I have iBio here, and we're going to look at a couple of things that is important. So we have the price, obviously, and stuff that we learned last time up at the top. And then also we have volume in the top right, and volume is basically the number of shares traded during the day. So obviously we could see for iBio in this picture, it is 106 million. And volume is usually an indicator of price action. So you want heavy volume, you want high volume, because that means more shares are being traded, and usually that is accompanied by an increase in price. It'll show you the open and close, which means for the normal market hours, it'll tell you what price it opened at, what price it closed at the day before. And then the days range is obviously the low and high of today. Market cap is just the free float times the price of the stock. And basically what free float is the number of shares that are out there for purchase. A good idea is to compare the volume to the average volume, so we can see that obviously for iBio on this day, the volume is much greater than the average volume of 23 million per day. It is at 107 million, so obviously we're going to see much greater price changes on a day like this rather than a normal day. It's much greater than normal. So we can scroll down, we can see a chart of the stock and its price over a different variety of time periods that you can sort at the top. So we have 1 minute chart, we have daily chart, weekly, monthly, quarterly, yearly. You're going to want to probably focus on the daily chart, and then that 1 minute chart you can change to 5 minutes, 15 minutes, an hour. You're probably going to use those mainly, just to give you some sort of idea of how the price has been changing recently. So obviously we could see in iBio's daily chart that it's rocketed up the past couple days. It's just been going up like crazy. So that's good. It's an uptrend, and we're hoping to see that continue. So if you scroll down, there is quotes, which is going to be the buying and selling. It's a volume kind of thing. It basically just shows you every trade, the price level and the amount of shares. And then in the news section is when news is posted. It's articles, not press releases from the company. There's its own tab called press releases. But this is just when websites make articles about it. And then there's a comment section. So you do have your Webull account. You can leave comments just like YouTube, and people will comment some crazy stuff. It's pretty cool to check out the comments, just see what other people think, everybody's opinion, but don't really follow them. Take them with a grain of salt, because some people just don't know what they're doing. They just comment whatever. Press releases, like we said, is where the official releases of news from the company go. They have to do a filing with the SEC when they want to release official information. So like we could see, the last press release was July 9th, and it was an 8K filed by iBio. Financials is the stuff that you can find on an company's 10K, and it's basically just the financial analysis of the company, but you can find it all here on Webull, so that's pretty cool. And then the profile is also another section that kind of just describes what the company does. It says what industry it's in, how the industry is doing, the institutional holdings, and just different stuff. So if you were looking into different companies, you can do it all from Webull, using the financials, using the press releases, and the analysis and all that. So let's jump over to Jagex. So I have 439 shares of Jagex at 50 cents. We can see obviously it's at 71 cents, so maybe I want to sell. To trade a stock, you simply hit the big blue trade button in the bottom left. So we're going to hit that, and it's going to take us to this other screen. It might take a second to load up, but at the top it should say create order. So there's a buy and a sell side. So in this case, we're going to do sell, so we're going to hit sell. If you are buying, you will leave it on buy and everything will be green, but if you're selling, it'll be red. The limit price is the price at which you want to buy or sell, and you can change that using the slider, or you can click the box and change that number. Quantity is the number of shares, and you can also do the same thing. You can move the slider. If you're selling, you can just move the slider to 100%, and that'll sell all of your shares. Or if you're buying, you can put a specific quantity, and it'll tell you the percentage of your buying power that you're using up. So if I have $20 and I buy $20 worth of shares, it's going to be 100% quantity. We see time and force. So it's basically how long or what time period this order lasts. As you can see, it says day, so it'll only last during the hours of operation for today, the normal hours, not including pre-market or after hours. So if we wanted to buy something after hours, or if we wanted an order to last until it hits a certain price, we have to change day to GTC, which is good till canceled. And I believe it's a 60-day period that it lasts. And there's an extended hours option right here with a little unchecked yes. You have to check that if you're going to buy or sell in pre-market or after hours. Take profit, stop loss is another thing. I'll probably make another video where it's just like a couple of advanced things. You don't really need to get into that when you're starting out, but we'll go over that in the future, or ask me about it if you want to know. So yeah, that's pretty much it. Let me know if you guys need any help. Yeah.